Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, trust you've all had a great weekend, right? Spending some quality time with your family and friends, right? And now we can get on to a brand new trading week as well. It's quite an exciting week, right? So before we start today's session, all right, hi Bob, good to see you. Hi Ren. Yes, I see the comments coming in. Yep, we'll definitely cover the Aussie and the cable as well. Of course, they're the major currency pairs. Right, we'll definitely be looking at those individual currency pairs as well. All right, before we start, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Hi, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so here it's quite a heavy calendar this week as well, but I just want to bring your attention to the interest rate decision by the Bank of Canada that's out on Wednesday, 4th of September, sorry, and with its jobs data as well, it's jobs week out of the US as well. So we've got the ADP employment report due for release on Thursday, and of course the BLS report where it's going to give us the latest insights into the non-farm payrolls and the unemployment rate on Friday as well. So this is the calendar for this week, right? As I mentioned, there's quite a few things going on, and we've got CPI data and GDP data out of Switzerland tomorrow. We have ISM manufacturing PMI report on Tuesday, as well as the services report on Thursday. We've also got GDP data out of Australia on Wednesday, and of course, the interest rate decision by the Bank of Canada, where they're expected to cut its overnight rate by 25 basis points to bring it down to 4.25% from 4.5%. We also have Joel's job openings on Wednesday, followed by ADP employment report on Thursday, and of course, the highly anticipated non-farm payrolls and unemployment rate on Friday as well. As you can see, it's a very a very heavy calendar, especially towards the second half of the week, right, where we can expect a lot of volatility for financial markets, right? Especially jobs data has been coming under closer scrutiny by both market participants and the Fed as well, right? A weaker job market or labor market is going to have a profound impact on consumer spending and GDP output as well. Right, so with that, okay, we can definitely expect the Bank of, I wouldn't say definitely expect, but it's market consensus is for the Bank of Canada to cut its overnight rate by 25 basis points to bring it down to 4.25%. So should we see that take place, uh, accompanied by a press conference that is projecting a dovish outlook on future monetary policy action, we can definitely expect the Canadian dollar to come under significant selling pressure. So if the Canadian dollar is coming under pressure, right, we can then expect dollar CAD to be lifted on Wednesday as well. So take note, any interest rate cut that's going to be accompanied by a dovish press conference is definitely going to weaken the Canadian dollar, and that of course would mean dollar CAD is likely to strengthen and gain and move up. Then of course we've also got ADP and employment report. If you all remember, ADP and non-farm payrolls have slowed down over the last 3 to 4 months, right? ADP grew only 122,000 in the month of July and August. The forecast for August points to jobs growth of just 136,000, right? So this is well below the average, 12-month average. I think the 12-month average for ADP is about, I believe, what is it? I think it's about 180,000 or something, or closer to 200,000 per month, the 12-month average. As you can see here, the latest readings and the forecasts have been coming in much lower than that. So job creation has indeed slowed down in the US, and it's also being reflected in the non-farm payrolls, right? Non-farm payrolls came in at just 114,000 in July, and the forecast for August points to about 164,000, right? So once again, this is also well below the 12-month average for non-farm payrolls as well. And at the same time, we are seeing the unemployment rate increase higher as well. The unemployment rate has increased over the last 4 to 5 months, right? And especially July's figure, right? July's figure was expected to remain unchanged at 4.1%, but it actually moved higher up to 4.3%. Now, the forecast for August points to a slight tick down in the unemployment rate to 4.2%. However, should we see a result that's going to be higher once again, if we do see a surprise to the upside, combined with a weak non-farm figure, that's definitely going to create intense selling pressures for the US dollar on Friday, right? Okay, so with that, let's move on over to the charts on TradingView and of course begin the analysis on the dollar index. Right, so you can see here the dollar index is in a strong downtrend, right? Take note, I'm on a daily time frame, right? We clearly see a very strong downtrend here. The market structure shows us a series of lower highs, lower lows, and also at the same time we are seeing it trade underneath the bearish Ichimoku cloud as well, right? But of course, with every downtrend, there's bound to be retracements to the upside, right? So we saw a nice retracement here in the second week of July, retracement to the upside for a couple of days. We saw a larger retracement here that occurred at the end of July, another retracement here in the beginning of August, and also another retracement here in mid-August. And of course, the most recent one here since last Wednesday, I've seen a strong three trading days of retracement to the upside as well. So of course, with every strong downtrend, there's bound to be retracements to the upside before resuming the downtrend. So this is what it looks like to be happening as we kickstart the new trading week. So we can see here, it looks like the dollar index is today run into resistance at around last Friday's high as well, right? This was the last Friday's high as well at around 101.78. It does look like the dollar index has stalled at this level once more today at today's market open and has reversed to drop lower. Right. Okay. So looking at where it found support last Tuesday and Wednesday, right? We see a nice swing low being formed here last Tuesday and Wednesday at around 100.59, which is also a level where the dollar index previously found strong support as well back on 28th of December, right? When we come here to 28th of December, we see a very significant swing low taking place here, right? It's a very significant swing low support taking place here, and it's also a level that it's also a similar level where the dollar index has once again found strong support, right? It's a very significant multi-swing low support level here, which we can definitely identify as the first support. Right, although of course we see this candle here on the 27th and 28th of August dropping slightly below this first support, but generally you get the idea, right, that this is indeed a very strong support zone here. Now, just to identify the next potential support area, we have to zoom out and head back to mid-July of 2023, where once again we see a very significant swing low taking place, right? It's a very significant swing low market structure taking place here. So quite clearly, the second support is going to be around this level here, which is at 99.70. Right, so this is how we've identified the first and second support levels for the dollar index on the daily time frame. Right, now what about resistance? Right, this is a pretty decent intraday resistance level here, right, at 101.78. We can label this as an intermediate resistance. However, when I look up a little higher, I see a pretty strong pullback resistance that's taken place on okay, well, rather this level previously functioned as support, right? This level previously functioned as support as recently as 5th of August, and of course back in the first couple of weeks of January as well. The dollar index found support at 102.15 before bouncing higher. We can even argue here on 8th of March as it was dropping down sharply. It found support just above this level to make a swing low and reverse to bounce higher, and another pullback or swing low here on the 5th of August. So what was previously a strong support level is quite likely going to function as resistance, and at the same time we see the bearish Ichimoku cloud hovering just above this pullback resistance as well, right? So not only do we have a pullback resistance level, we also have this bearish Ichimoku cloud, which itself can function as a resistance zone. And we have also identified an intermediate resistance level that has occurred last Friday and today as well. Now we can also run a Fibonacci retracement on this downtrend here, right? We see a nice downtrend here. We can run the retracement from this high on the 26th of June going down to last Tuesday's low. We can see that this intermediate resistance level aligns pretty well, or rather the 23.6% Fibonacci retracement aligns pretty well with this intermediate resistance, so it does seem to be an area where the dollar index has indeed stalled. And then a little higher up where the 50% retracement level sits, I also see another resistance here, right? We see the pullback coming up as the dollar index retraced higher in the first and second week of August. It stalled around this region of 103.40 before reversing to drop lower. So this is where we can identify the second resistance that also has the presence of a 50% Fibonacci retracement. So we'll keep 33 and 50. Right, hi HSL. Yep, we'll definitely cover dollar yen as well for sure. No worries, we'll definitely cover dollar yen as well. Right, so these are the key levels for the dollar index, of course. And one final thing that we can do is also identify a pretty decent descending trend line as well. We can see this descending trend line, which has been tested several times at the end of July and early August. Right, so clearly the bias for the dollar index is to the downside, but of course, with any downward move, we can expect retracements to the upside, and we saw that last Wednesday as well, and went all the way till last Friday. So last 3 trading days, or rather the second half of last week, saw strong retracements to the upside. Right. Not only do we notice a strong support level here, as identified by the swing low on 28th of December, when you look at the stochastic, the RSI and the stochastic oscillator, they actually indicated an oversold condition last week. So when you look at the stochastic oscillator, the RSI on Wednesday, 21st of August, or rather 2 weeks ago, right around here, we saw RSI dropping as low as 25, stochastic dropping below 6 and 7 as well. And we did see the dollar index sort of stabilize a couple of days after, right? You can see very clearly there was when you zoom in here, there's an oversold condition being highlighted on 21st of August, and then another oversold condition being highlighted on the 27th as well, right? And we did see the dollar index stabilize at 100.61, which was the swing low support of December last year, and we saw a nice retracement to the upside. Now, looking at the 4-hour time frame, we can see that the dollar index has indeed stalled at around a 23.6% Fibonacci retracement. So it's probably we have a good short opportunity for the dollar index currently, right? Remember, the bias is to the downside, and after running the resistance here at around 101.80, it does look like it's pulling back. So probably we can expect this this index to drop lower today, right? We have a potential bearish reversal, right? A potential short opportunity for this index here, right? Especially since it has stalled at the 23.6% Fibonacci retracement, and it's under the first resistance as well, right? So you can identify your stop loss just slightly above the 23.6% Fibonacci retracement, right? Give yourselves about a 10 to 15 pip buffer above the 23.6% Fibonacci retracement. That should be a sufficient buffer for the short trade, right? Without risking too much. And should we see the dollar index drift lower, right? We can identify several intermediate take profit zones as well. Right, we can run a Fibonacci retracement starting from here, 27th of August, going up to the high of early this morning. When I look at the 38 and 61% retracement levels, I see a nice pullback level taking place here last Thursday, 29th of August, and another nice overlap level here that's been in place since the 29th as well. So if I just let me highlight it here, right, there's a nice pullback support level that aligns with the 38% Fibonacci retracement, and there's another nice overlap support that aligns with the 61.8% Fibonacci retracement, right? So these support levels now can be used to identify your as potential take profit zones. So as we see dollar index reverse off the 23.6% Fibonacci retracement here, we see a bearish reversal currently taking place. We can then identify several take profit zones based on the Fibonacci retracements and pullback and overlap supports. So once again, this nice pullback support level at around 101.27 that has the presence of a 38.2% Fibonacci retracement. This is where we can identify the first take profit level, and a little bit below there's an overlap support at 100.92 that has the presence of a 61.8% Fibonacci retracement. This is where we can identify the second take profit level. And finally, of course, we have the multi-swing low at 100.61 that can be used to be identified as the third take profit level for the short dollar index trades, right? Of course, right, it's not going to fall down like a rock in a straight line. It's going to take time to go past this level, this respective level, should we see the bearish momentum gain further traction, right? But this is how we can identify suitable take profit levels based on support zones for the short trade. And also when you look at the 4-hour time frame, when we look at the stochastic and RSI indicators, right? On last Friday, 30th of August, we saw RSI hit about 69, stochastic hitting about or above 90, and it's where we saw the dollar index stall as well. So not only did it stall at the 23.6% Fibonacci retracement level, it also stalled within the bearish Ichimoku cloud on the 4-hour time frame, and also we saw these two momentum indicators highlight a potential overbought condition. So overbought condition typically means we can expect prices to stall and potentially reverse to pull back and drop lower. Right, so these are the key levels for the dollar index on the daily time frame and on the 4-hour time frame as well. These levels are more than applicable for this index too. Right, so the bias is to the downside. So as long as it stays underneath the 23.6% Fibonacci retracement, right, it's quite likely it's going to drift lower, and we can target the 38% and 61.8% Fibonacci retracements as well. And also take note, financial markets are going to be closed in America and Canada today, right? It's Labor Day weekend, right? So they have a 3-day weekend for North American traders. So we can definitely expect trading volume and trading activity to significantly drop once the European session comes to an end. So take note, right? The European session, trading session or trading hours are going to come to an end in a couple of hours or in a few hours. And since Canadian markets and the US markets are going to be closed, right, we can expect significantly lower trading volume and activity. So it's quite likely it's going to be a very quiet trading session for the rest of the day, right? Right. Hi, Bob. Okay, yes, there's a little green area here. You're right. The Ichimoku cloud has transitioned to green as well. But generally, when you look at it here, this is what something similar that happened at the end of July and early August as well, right? The cloud transitioned from red to green. Typically, it would highlight a bullish shift in bullish momentum, but we can see that the strength or the bias for the dollar index is still to the downside. So that is why I still feel that we can expect this index to remain under pressure, right? Because when you look at it on the daily time frame, it is trading well below the bearish Ichimoku cloud, right? There's no significant shift in momentum just yet, right? So this retracement to the upside is likely to stall and reverse to drop lower despite the Ichimoku cloud here turning green as well, right? Okay, so these are the key levels for the dollar index on the daily and 4-hour time frame. Right, there was a request for the Aussie and Kiwi as well. So let's do that. Let's start with sorry, not Aussie and Kiwi, cable and Kiwi. So let's start with that. So we'll start on the daily time frame here. So we can see cable has hit this swing high, made a swing high resistance on Tuesday, 27th of August at 1.3266. This is where it last stalled. So this is quite likely going to be the first major resistance here. And if we zoom out a little bit, we can see it has broken through many prior swing high resistances as well, especially this one here in mid-July of last year. And it is actually testing, if you zoom out, it's actually testing this resistance level here, or rather this swing high resistance here. So there's a swing high resistance that took place on 22nd of March 2022 at around 1.3262. And this is a level where my cable did indeed stall last Tuesday as well. So you can see how prior significant swing high resistance, right, this occurred back in March of 2022, can once again function as a strong resistance area, which is where this currency pair stalled once again. Now, this was a prior swing high resistance. This was a prior swing high resistance that occurred in mid-July 2023. So this level could be used as a potential pullback support level, right? As cable broke above this prior swing high here. This what was a prior swing high can then function as support, and which is what looks to be occurring right now. So although we can see this candle here on 30th of August, last Friday, dropped slightly below the pullback support, but we can see today this currency pair stabilized around this region here. So we can still use this pullback support level and identify it as the first support, And this is another swing high resistance that occurred on 17th of July. This can now be identified as the next potential pullback level at 1.3008, and we can use this level to and identify it as the second support. Now, of course, on this nice uptrend here, we can also run a Fibonacci retracement, starting from this swing low on 8th of August, going up to the high of last Tuesday. Right, we can see, let's pull up all the fibs. We already see the 38% aligned very well with the second support, and also the 23.6% retracement aligned very well with the first. So let's keep 23 and 38, of course. And we can highlight this as a zone here as well. Oops. Hang on. Right, so actually this first support can be identified as a potential pivot level as well, where we can identify it as a potential pivot, and we can identify this level here where the 38.2% Fibonacci retracement sits as the first support. Right, so with dollar looking to weaken, right, especially if dollar index pulls back even further, we can then also expect cable to rise higher. So we have a potential bullish bounce here for this currency pair. Right, this is a pretty strong support level, and also I'll be looking for it to get confirmation of that uh, bullish resumption. Right, we can see a nice descending trend line here on a daily time frame, so clean break above this descending trend line would definitely attract a lot more buyers for this currency pair, and we can expect it to make another attempt towards the first resistance once more. Right, and looking at stochastic and RSI, we can see that here on 23rd of August as well as on 27th of August, we see RSI hitting about 75 each time, and we also see stochastic well above 90, right? Both of which would indicate a potential overbought condition. So you can see here on 23rd of August, we saw an overbought condition. We saw cable pull back the following Monday on the 26th, but it made another high. And then this high on Tuesday, we saw another overbought condition as well, right? A potential overbought condition being highlighted by these momentum indicators. And then we did see a strong pullback that lasted from Wednesday till last Friday. So you can see here when these momentum indicators do indicate a potential overbought or oversold condition, we do really see the turning points or the reversals for the respective instruments or currency pairs. It even works for the commodities, of course, and for the indices. So the last time prior to August, the last time we saw overbought conditions was on 17th of July, right? We saw here cable hitting about 1.3040 before reversing to drop quite strongly. And also on the flip side, conversely, we saw an oversold condition here on 7th of August, right? RSI dropping about 37, 38, stochastic dropping about 15. We did see cable stabilize at around 1.2685 before staging a very strong rebound here, right? So you can do see on the daily and 4-hour time frames when these momentum indicators highlight a potential overbought condition or potential oversold conditions, it's when we really do see the turning points for this respective instruments, right? Okay, so now these are the key levels for cable on the daily time frame. Right, let's look at it on the 4-hour time frame. Zoom in a little bit here, and on the 4-hour time frame, we see this currency pair finding support at the pullback level, which is the pivot at 1.3135. It has also found support within the bullish Ichimoku cloud. Remember, when the cloud is green in color, right, it's a bullish cloud, and the cloud itself can function as a potential area of support, which is what seems to be happening today as well. And at the same time, we do see the stochastic and RSI indicator highlight a potential oversold condition on Friday, 30th of August, right? So as of last Friday, we did see a potential oversold condition being highlighted with RSI dropping down to 38, stochastic dropping down to about 14, and we did see cable stabilize around this level. Now, as I mentioned, it's also trading underneath a nice descending trend line here, right? It's trading underneath a nice descending trend line. So clean break through this descending trend line is quite likely to attract more buyers, and we can expect this currency pair to then bounce higher. So there's a potential bullish bounce opportunity for cable here, right? So if you wish to, the entry point can be identified at around the pivot, right? The entry point can be identified at about 1.3135, and you can place your stop loss slightly below last Friday's low as well. If you do not wish to keep a very wide stop loss, right, you can keep the stop loss or identify a potential stop loss maybe 10 to 15 pips underneath the low of last Friday, and we are looking for a potential break through this descending trend line for confirmation of the bullish breakout, right? So entry level for a potential long opportunity for the cable, we can identify the buy entry at around the pivot, which is at around 1.3135. And for the stop loss, if you do not wish to keep a very wide stop loss, we can use the low of last Friday and identify the stop loss at about 10 to 15 pips underneath the low of this last Friday, and then target the first resistance as a potential take profit zone. Otherwise, if you do not wish to keep the low of last Friday as a potential stop loss level, we can also use another pullback level here. I see a nice pullback level here taking place on 22nd of August and 23rd. We can identify this level at 1.3081 here and identify a suitable stop loss slightly below this level as well, right? So we're looking for support areas and identifying a stop loss level that's slightly below the support area, right? We need to give ourselves a little bit of a buffer, and by placing the stop loss 10 to 15 pips underneath near-term support is a suitable area to do so. Right, so these are the key levels for cable on the 4-hour time frame. Right, let's move on over to the Aussie, then we'll cover dollar yen. So we'll start on the daily time frame, and we can see the Aussie has made a significant rebound of its lows from last 5th of August, right? Last 3 to 4 weeks have seen a strong rebound in the Aussie, and it ran into resistance at the prior swing high resistance, right? We can see here this level at around 67.84 was a swing high resistance that occurred in mid-July, and this is where not exactly at this level, but right in the vicinity of this level is where the Aussie has once again stalled as well. So we can see here that this was a strong resistance area here, which still seems to be in play. So we're going to identify like this, the top of the wick here. There we go. So this is the first major resistance for the Aussie, and it's rising up towards this level once more, right? Of course, with dollar index falling, pulling back, you can definitely expect the Aussie to be rising. So should you have any long Aussie positions today, right? Maybe today at the open, you've gone long on the Aussie. Should you have any long positions, you can identify a suitable take profit zone that's identified at this swing high resistance here. So between 68 cents and about 68.25, right, would be a suitable area to identify any potential take profit zones for the long Aussie trade. Now, the next resistance above this is quite clear, right? When we look at this swing high that occurred on 28th December, this is a significant swing high resistance. So this is where we can identify the second major resistance for the Aussie. Right, now what about support? Right, I see a very nice pullback level here that occurred on Thursday, 22nd of August, 2 weeks ago, right? Nice pullback support level here. So we can clearly identify this as the first major support for cable. And at the same time, we can also identify, I see a nice intermediate support level at 67, 61. Sorry, not for cable, for Aussie. Right, there's a nice intermediate support level here where this currency pair stabilized last Friday and today as well before staging a pretty decent rebound here. Now, with this uptrend, we can also run a Fibonacci retracement starting from this swing low on 5th of August going up to the swing high here. We can see there's several levels that we can use. We can see the 23.6% retracement aligned quite well with the pullback that occurred last Thursday, 2 Thursdays and Fridays ago, 2 weeks ago. And at the same time, I see another overlap level. Here there's a nice overlap level that we can identify as the second support. Right, this was a pullback support level here that occurred at the end of June, and then a nice resistance here in mid-August, so that creates this overlap here. Right, so once again, we can see that, okay, this intermediate support level, right, can be identified as a pivot as well, because this is where the Aussie has reversed, right? It found support, it stabilized around this level today as well, and has reversed off this pivot to move up towards the first resistance. So once again, should you have any long Aussie positions, right, we can identify a suitable take profit zone for the long positions within this resistance zone here, right? So between 68 cents and about 68.24 is where you can identify a take profit zone for the Aussie. Okay, looking at the 4-hour time frame, right? Looking at the 4-hour time frame, right? The levels are fine as well, right? There's no need to adjust the levels, and we can see the Aussie as well finding support just above the bullish Ichimoku cloud. Remember, the Ichimoku cloud, when it's green in color, it's bullish. The cloud itself can then function as a uh, area. The cloud itself can function as an area of support, which is what has happened as of last Friday, right? So it looks to have stabilized at the cloud, just above the cloud, and looks to be moving a little bit higher. Now after that we've had uh, Aussie cable. Now let's look at dollar yen. Right, let's take a look at dollar yen. Similarly, of course, right, you see the market structure here for dollar yen and the dollar index quite similar, right? Not the perfect mirror image, but it's not the same, not the perfect market structure, but it's very similar, right? You can see here this consolidation here towards the end of last week, and all right in the middle of last week, and staging a nice rebound. This is what we're currently seeing today as well. All right, so for dollar yen, right, it is trading, continues to trade underneath the bearish Ichimoku cloud. The bias is still to the downside. However, we can see the retracements, the upside have been very strong, right? We see a retracement here over a couple of days here in mid-July. Another strong retracement to the upside here in the third week of July. Another consolidation and retracement here at the end of July, and this very strong retracement in the first 2 weeks of August as well. And now another strong retracement to the upside as of last Wednesday, right? So you can see here, despite dollar yen falling very rapidly and sharply, there have been strong retracements to the upside along the way as well. Now, I think we can probably draw yes, there was a pretty decent descending trend line, right? There's a pretty decent descending trend line that was in place. However, it looks like we've seen a bullish breakout take place as of last Friday, right? It looks like we've seen a bullish breakout take place. So we might see a major shift in momentum for this currency pair, right? It has broken out of this downtrend structure, right? We see a bullish breakout take place last Friday, and the momentum has continued today as well. So I see a first major resistance for the dollar yen at this swing high that occurred on mid-August, right? 16 August. And this is where the first resistance can be identified, right? So should we see a much more larger move for dollar yen to the upside, right? This is an area where we can target a potential take profit zone, and it's also close to where the bearish Ichimoku cloud sits. Remember, when the cloud is red in color, right, the cloud itself can function as an area of resistance, right? This time it could function as a potential area of resistance. Now, in terms of support, right, this is a very significant swing low here that occurred, of course, on 5th of August, and then another one on 28th. So this is like a multi-swing low support level for dollar yen. And we can identify this as the pivot as well, right? So this is a multi-swing low support, and price has reacted on this pivot very strongly, right? So we see a nice bounce off a multi-swing low support, and we are seeing this currency pair climb higher. Now we can also run several Fibonacci retracements, right? We can run a Fibonacci retracement on this big move here from 3rd of July down to 5th August. We can see that a 38.2% Fibonacci retracement aligns very well with this swing high that occurred in mid-July. So let's just keep 38%. And we can also run one more Fibonacci retracement starting from this swing high on the 15th of August, going down to the low on Monday, last Monday. Let's pull up all the fibs. We can see that the 61.8% Fibonacci retracement sits over here at around 147.20. I would like to just highlight this level as well, right? Because this level is going to be pretty important too, because although we've seen a nice bullish breakout take place here, right, the next major resistance could be around the 61.8% Fibonacci retracement. So if we do see dollar yen break through the 61.8 retracement here, then it's quite likely we can see it make a good serious attempt towards the first resistance at 149.28. So take note here, although we've seen a nice bullish breakout take place last Friday, and we do see the momentum continuing today as well. I see a pretty significant resistance barrier here as identified by the 61.8% Fibonacci retracement. So take note, this is going to be a key important level. So a clean break above this level, then we can have further conviction that this currency pair can rise up towards this first resistance at 149.28. Okay, now what about the next support level slightly below this multi-swing low? So we'd have to zoom out for that. And then we can see a nice swing low taking place here at the end of December 2023. It's almost like a multi-swing low again, right? We see it finding support here on 14 December, retracing higher, finding support once more on the 29th before bouncing higher. So it's like a double bottom here before dollar yen bounced. So quite clearly we can use this level here and identify it as the second support. Zooming out a little bit more. Okay, that's fine. So yeah, so these are the key levels for dollar yen. If we look at, right, so we don't see any overbought or oversold conditions being highlighted by RSI or stochastic. The last time we saw a strong oversold condition was on 5th August, right? We see RSI dropping as low as 13 and stochastic dropping under 7 as well, dropping under 5. And we did see the dollar yen stabilize at around 144, right? Roughly around 144 on Tuesday before staging a strong retracement to the upside. So as of now, right, they're both sort of mid-range, right? Stochastic is around 50, RSI is around 44, right? It's neither highlighting potential overbought or oversold condition just yet on the daily time frame. Right, let's look at it on the 4-hour time frame. On the 4-hour time frame, right, you can see here a little bit more clearer, right? There is a pretty decent resistance level as well. We see a nice pullback resistance level here occurring on 20th of August, another one here on 21st as well, which is quite close to where the 61.8% Fibonacci retracement sits. So if we do see a clean break above this level here, then of course we can definitely target this swing high resistance that occurred on 15th of August as the next potential take profit zone. And looking at stochastic and RSI, not really indicating overbought conditions just yet. On the 4-hour time frame, the last time we saw a condition for overbought, a signal for overbought condition, potential overbought conditions was on 15 August, right? We see RSI hitting about 69, stochastic climbing to about 95, and we did see dollar yen stall at around 149.40 and reverse to drop lower. As of now, RSI is about 66, stochastic is about 86, right? It's not really indicating overbought conditions just yet. So perhaps we may see further upside for dollar yen, right? There may be a potential for further upside for dollar yen, especially if we can break above this 61.8% Fibonacci retracement. All right, okay. Right, hi Bob. Okay. What I'm looking for, yes, you're right. RSI is similar to stochastic, but what I'm actually looking for is for both of them to line up together. Because typically when you see both of them line up together for at the extreme ends, whether it's above the extreme ends on the high side or the extreme ends on the low side, typically when they line up together, it gives us a higher probability and higher conviction that we do see a potential reversal taking place, right? If you look at it on the daily time frame, right, for the dollar yen is not so clear, but for the dollar index, right, when you do see RSI and and the stochastic drop towards extreme levels, right, you do see a strong potential for a reversal taking place, right? So that is why I use both of them in conjunction, right? Although they're very similar, but what I'm actually looking for is the double confirmation, right? So basically I'm looking at it as a double confirmation, right? You can use the MACD as well, right? You can use the MACD as well, but then again, it's all about what indicators you like to use as a trader. For me personally, I would use the RSI and stochastic in conjunction, right? I may use the MACD on and off as well, but as a primary analysis tools, I would use the RSI and stochastic in conjunction, because what I'm looking for is like a double confirmation on the extreme sides, on the extreme ends to the upside and to the bottoms, to get a higher level of conviction and a higher level of probability that we have an impending reversal taking place. Now, whether that's a bullish reversal or bearish reversal is going to be indicated by both of them, right? Okay, so let's see. We've covered dollar yen. All right, now let's move on over to gold. We'll cover the commodities, right? We'll cover gold and oil, and of course any other requests that you may have, right? So do drop your requests in the chat box, right? Drop them, get them in early. I'll be more than happy to go through the analysis with you. Right, now let's look at the commodities. So looking at gold, right? Gold has made a new intraday all-time high here on 20th of August. This is at $2,531.72 per ounce. It's quite clearly this is the first resistance for gold. Now, how can we possibly identify the next resistance level here? Remember, we have no other pullback, overlap, or swing high resistance that we can reference from the past. So in such a scenario, we have to rely on Fibonacci tools. So we're going to rely on an extension level first, and this extension level can be found by running a retracement from this swing high, 17th of July, down to the swing low on the 25th. Key extension levels sit at 137, 161, and we can see quite clearly 137 has already been exceeded. So we'll get rid of that. We'll keep 161 on for now. And at the same time, we can also run now another projection as well. I think I'm going to run the projection from here. Right, there's a pretty good projection that we can run from here. This low on 26th of June to this high on 17th of July, ending with this low here on 25th. You can see 78.6 has been surpassed, so probably we can use the 100% projection. Right, 100% projection sits quite close to the all-time high here. So let's keep 100% and identify this as a resistance zone here, which is at 2,531, and the next resistance is around at 2,564. Now in terms of support, I see a nice overlap support level here at 2,483. Right, previously this was like a multi-swing high resistance. First swing high took place on 17th of July. Right, first swing high resistance took place on 17th of July. Second swing high resistance on the 2nd of August. A small resistance here on 14 as well. So this was previously a multi-swing high resistance, which then proceeded to function as support. So you can see here, gold made a pullback here on 22nd of August and found support at around $2,483 per ounce and retraced a little bit higher here. Right, so for now, if you actually look at it, gold prices are sort of consolidating between the lower bound of 2,483 and the upper bound of 2,530. This has been in place since 20th of August. So the last 2 to 3 weeks, gold has been ranging between these two levels here. Right, now with this uptrend here, we can also run a Fibonacci retracement from this low on 7th of August going up to the all-time high here. Let's pull up all the fibs. You can see that, right, there's a 23.6% Fibonacci. Okay, it's already been hit, gone below, so we can't use 33, but we can use 38 and 61. Right, so this overlap support level here also has the presence of a 38.2% Fibonacci retracement just underneath it. Right, this adds further significance to the strength of this support level. And I see another overlap level here at 2,447. This was previously a swing high resistance at the beginning of August, after which it proceeded to function as a pullback support in mid-August before gold bounced higher. So this then creates an overlap level which we can be used to be identified as the second support, and it also has the presence of a 61.8% Fibonacci retracement just underneath it. Right, so this first support can also be identified as a pivot level here. So should we see gold prices pull back, we may see a nice potential bounce off this level once more. Right? Although gold seems to be retreating away from the pivot now, but this pivot level here can be identified as a nice potential entry, long entry as well, because we see gold ranging between these two upper bounds, this upper and lower bound here. So if it did had gotten closer to the pivot earlier today, right, it may have helped us identify a pretty decent opportunity to go long on gold. But for now, it looks to be retreating away, retreating away from this level, right? As dollar index falls. Remember, dollar index falls. Typically, gold prices are going to be lifted as well. So that's what we're currently seeing at the present moment. Right. So that means second support now can be our first support. So take note, the pivot level is actually still a support level, but we've just highlighted as a pivot because potentially this is where gold prices can reverse, right? Make a bullish reversal should it hit this level once more. Right, okay, so these are the key levels for gold on the daily time frame. Looking at it on the 4-hour time frame, we can see that gold seems to have stabilized within the bullish Ichimoku cloud today, right? Something similar that we saw on Wednesday as well. Last Wednesday, it stabilized just above the cloud before retracing a little bit higher. Looks to be doing something similar now as well. All right, so these are the key levels for gold. So it looks like it's going to climb higher. So that means if we do see gold continue to move higher, right, we can then identify a potential take profit zone at around the first resistance here, right? So this is going to be a strong resistance barrier for gold prices. So anywhere between 2,525 and 2,532 is a pretty decent area to identify as a potential take profit zone for any long trades that you may have, right? Because we can see here, gold does seem to have reversed of this intermediate support level, right? We see a bounce here on 22nd of August, a bounce here on 30th of August, last Friday, and this morning as well. So it does look like it has reacted off this level here, which is also happens to be inside the bullish Ichimoku cloud. The cloud itself can function as an area of support, so we could see this bounce gain further traction, and should that happen, we can expect gold to rise up at least towards $2,520 per ounce. So this is another region here that you can identify as a potential take profit zone. All right, so that's what we have for gold. Let's move on over to oil, crude oil. Right, we can see crude oil has actually been pretty volatile, right? We can see it make significant swings very recently, right? Of course, there's a nice, we can argue here as a small swing high that took place here, or pullback that took place here last Thursday and Friday, a significant swing high resistance at the beginning of last Monday, another swing high resistance here on 12th August, significant swing low here, 22nd of August, another significant swing low here on the 6th, and of course this swing low here on the 5th of June as well. Right, and of course you see another swing low here that occurred on 5th of February. Right, so what that means is, right, we can identify significant support and resistance levels here. So in terms of support, right, I see a very strong multi-swing low support at around $72.31 per barrel here. Right, is a very, oops, this is supposed to be support, right, very significant support here. Strong support zone. And of course, resistance is going to be around this pullback level here, right? First resistance quite likely to be around this pullback level here, which is at $76.82. And I can see an intermediate resistance over here because this was previously like a support level here on 28 and 29 of August. Crude oil prices finding support around $75.20. So what was previously support could now potentially function as resistance, but this is more like an intermediate resistance. The major resistance here is at 76.82. Now, of course, for the next support that we see, we can be identified here as well. There's another nice swing low taking place here right at the beginning of January. This is at $70.35. This is where we can identify the second major support for crude oil. Now, okay, we can probably run retracement from here, this swing low on 21st of August to this swing high here on 26th. What I'm looking for here are extension levels. Key extension levels are at 137 and 161%. So in this case, we see the 137% sit quite close to where the second support is. And you can see here, right, this is a pretty strong support zone over here as well. Right, so with crude prices falling quite strongly last Friday and today as well, it was actually dropping quite sharply today as well. Right, we're expecting it to drop or at least reach towards this multi-swing low once more today, but it looks like crude prices have stabilized and managed to climb back above $74 per barrel and look to be just retracing a little bit higher. Now let's look at it on a 4-hour time frame. Bring up the cloud. No, the cloud really doesn't tell us anything here either, so that's fine. Now on a 4-hour time frame, I'm just going to fine tune the levels a bit. First resistance, I'm pulling it up back up here to $77.57. And the intermediate resistance, right, can be identified as a nice overlap as well. And we see a nice overlap level at $75.25. Right, so this is where potentially we could see crude prices stall once more as well. And when you look at it here, zoom out, this I also do see a nice descending trend line, right? There's a pretty good descending trend line that's been in place, right? We see this trend line being tested here on 12th July, 18th July, mid-August as well, even here at the third week of August. So we see this is a pretty significant descending trend line that coincides well with this first resistance here at 77.57. So this is a strong resistance barrier here, a very significant resistance area here. And I do see an intermediate resistance level at 75.25. So if this level, if crude prices stall, right, if WTI oil stalls around this level here, we could potentially see it reverse and drop lower. So maybe this level here at 75.25 can be identified as a potential short entry here. And we can also use a retracement, Fibonacci retracement from this high, 29th of August, going down to today's low. Let's pull up all the fibs. We can see that this overlap resistance level also has a presence of a 38.2% retracement here. So this zone here between 38 and 50 is quite likely to be a pretty strong resistance barrier as well. Right, a strong resistance barrier here. So so we see crude prices move up towards this level here, it could stall. So if we do see it stall in this region, then we have a potential short entry for crude prices. And then we can target, should that bearish reversal take place, then of course we can target this first support here, this zone here between $73 per barrel and $72.30 as a potential take profit zone here. Alright, so these are the key levels for XTI USD as well. Right, crude prices continue to remain under pressure, but of course we've seen very strong swings for this commodity, right? So do watch out. But if it does reach this level here, that's identified by the 38 and 50% Fibonacci retracement. If it does stall within this region, it gives us a better opportunity to a better short opportunity for crude oil as well. So if we see a potential bearish reversal take place within this zone, and then we can target close to this multi-swing low support level here as a potential take profit zone. Alright, before we continue as well, I'm just going to launch a poll. Truly appreciate it if you guys could give your feedback with regards to today's webinar. Alright, okay, so yeah, so truly appreciate it if you guys can give your feedback as well, and we'll just move on. Okay, we can wrap things up by looking at the US 500, right? Let's cover the US 500. Let's start on a blank canvas, and we can see US equity markets have made a very strong V-shaped recovery, right? after making intraday all-time high here on 16th of July for the US 500. We saw it pull back very sharply, dropping as low as 5,100 on 5th of August before staging a very strong V-shaped recovery, right? So very clearly, the first resistance is at where the all-time high was formed, the intraday all-time high hit at 5,673. So we can identify this as the first resistance very clearly. And a little bit below, I see a nice overlap level as well. Right, I see a resistance here on 31st of July, a support here on 29th of August. This creates an overlap level that we can identify as the first support. Now, in this scenario, how can we potentially identify the next resistance, right? Remember, it's trading close to its all-time high. So in this scenario, we can do a couple of things. We can use a Fibonacci projection starting from here, 0.1, 19th of April, going up to the all-time high on 16th of July, down to this low here on 5th of August. Let's pull up all the projection levels. We can see that 78.6% aligns very well with the intraday all-time high, and 100% sits at around 5,840. So let's just keep these two projection levels, get rid of 61.8. And we can also run a Fibonacci extension. To find that extension, we're going to run a retracement from here, 1st of August down to 5th. Key extensions sit at 127, 161. And now we can see there's a 127% extension level aligning close to the 78.6% projection. This creates the first Fibonacci confluence, and we see the 161% extension aligned close to the 100% projection. This creates the second Fibonacci confluence. The confluence basically means you have more than one Fibonacci level at a particular price zone or at a particular price point. So that's how we've identified the first resistance as well as the second resistance. This is for US 500 on the daily time frame. Right, and finally, we can also run a Fibonacci retracement on this uptrend here from 5th of August going up to the high, which is the absolute high. Okay, it's this one here, this candle here. And let's pull up all the fibs. And you can see there's a 23.6% Fibonacci retracement just slightly below it, so that's fine. And we can see there's another pretty good support level here that occurred on 25th to 30th of July around the 38.2%. So let's just keep 23 and 38. Highlight this as a zone, and we can also identify the second support for US 500 at around 5,402. Now, I also see a nice ascending trend line for US 500. So it looks to be pulling back today. So if it does manage to stay above this ascending trend line or come close to this ascending trend line once more, it may give us a better opportunity to go long on US 500. We can see it's bounced off this trend line here, first on 8th of August, then on the 29th of August. So should we see it pull back towards this trend line once more, it may help us identify a potential opportunity as well, or potential long entry once more, right? You can see here it looks to be stalling at the high that was formed last Monday, right? It looks to be stalling around there. So if it does make a slightly deeper pullback towards the ascending trend line, it may give us a better opportunity or better entry for a long position, for potential long position on US 500. All right, so that brings us to the end of today's webinar. Right, thanks everyone for tuning in, and also thanks for responding in the poll as well. Right, right. So do look out for all upcoming webinars by IC Markets for the rest of this week, and take note of the calendar as well. It's jobs data, jobs week in US as well. We've got the ADP employment report on Thursday. We've got non-farm payrolls and unemployment rate on Friday as well. Right, and also of course on Wednesday we've got the Bank of Canada that will is very likely going to cut its overnight rate by 25 basis points down to 4.25%. So we're quite likely going to see Canadian dollar come under pressure, and that could provide a tailwind for the dollar CAD. All right, so that's all I've got for today. Thanks everyone for tuning in, and once again, do look out for all upcoming webinars brought to you by IC Markets. All right, take care, have a great trading week, and catch you all at the next webinar.